Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we're going to be looking at ticker symbol BBWI, that is Bed and Body Works Inc. I believe this is a candle, perfume, shampoo, conditioner type store, I think. And also bath stuff, bathroom stuff, rugs, maybe. Um, yeah, candles, scents, soaps. Um, yeah. So we know the company, or I've been there before. Uh, they do have earnings in a couple days. Does this stock deserve to be at 48, higher or lower? We're gonna run my um, stock calculation to determine if the projected price target should be higher or lower than 48. We're going to see what hedge funds and institutions are doing. We're going to look at the balance sheet. We're going to look and see some financial metrics and go from there. If you have not already, let's go ahead and hit the subscribe and let's get on with it. So, with earnings coming up, I do just want to check for areas of gaps. Gaps typically work as magnets to pull the price of the stock up or down. So the first one I see is right here at 46. And I also see one right here at $40. So to the downside, keep in mind these mental blocks of 46 and $40. I don't see any other gaps lower, which is good. To the upside, the stock did go from around $8 to $80 during the 2021 market melt up. We do have a nice little gap here at 65. So if this stock, if my calculated price target shows that there's big upside, if institutions and hedge funds are loading, if insiders are buying, if technicals are on the bulls side, I think we have a bull case, and I think 65 could be possible, but we're not there yet. All right, so remember those price targets to the upside. We have 65 as our bullish target, and then we have 46 and 40 as our bearish targets. And the stock could always go higher or lower. Just calling that out. I'm sure you know that. All right. Looking at the bigger picture, we do have this relative strength is on the side of the bulls. The momentum is on the side of the bulls. The money flow is it's kind of been flat for 1, 2.5 years, but it is curling up right here. The relative momentum indicator is also going up. It's at 59, and if it continues upward and we see it go breach this purple line, it could be some good news for the bulls, people who are long. Looking at the shares outstanding, it's going down. That's fantastic because it just shows that there's natural and organic accumulation of the stock. Sales are kind of up and to the right. If you look from 2020 to 2024, it looks like 2021 and 2022, they got a little plateau. It's come down a little bit, come down a little bit more. It looks like they could use a boost in a new product, some sales, maybe marketing campaign. I don't know. Earnings per share, kind of again, same picture up and to the right, a smidge. I mean, we plateaued here. We're up and to the right, and we're coming down, but we're still higher than where we were 2020. So I think overall the sales and the EPS are kind of up and to the right. All right, looking here, this company has 43% gross margins, which for a big box retailer, physical stores, paying employees, insurance, rent, maintenance, that's great. They have nice profit margin of 11%. Their price to earnings is 12, which is juicy. Their forward price earnings is also 12, which is nice. Basically, if the company continues on their forward path trajectory, they're going to be undervalued. I don't know if I'd consider this undervalued yet. They do have a $10 billion market cap. They almost do 1 billion in income. They do offer a dividend, which I'm not a huge fan of. For a big box retailer like this, they do have adequate cash. If they did close their doors tomorrow, they could pay off any debts, loans, notes, liabilities, etc. A lot of a little bit anything over 100 million shares is a little bit more than I like, but I mean, With a price to earnings ratio of 12, that's decent. Okay, so we're gonna go ahead and run my super awesome calculation. We have 10 billion, 800 million in market cap. We also have 878 million in income. Plus we have 7 billion, 430 million in sales. Good. It's good. And we're gonna go down and look at the debt and the cash. The balance sheet, quarterly. All right. Just really quickly, total assets is 5.4 billion. Total liabilities is 7 billion. When you have more liabilities than assets, I'm not going to say the word. I'm not going to say the word, but yeah. So, yeah, they do have plus 1 billion 84 million flat on the dot cash. Total debt they have 5 billion 392 million. All right. I do not like that they have more liabilities than assets. That is not good. Again, if they cut that freaking dividend and address their liabilities, that would be desirable. What are they doing? I mean, they're slowly paying down their debt, but gosh dang. Having more assets than liabilities is just not good. Just gonna look at their income really quick. Yeah, I mean their gross margins, their gross profits almost, I don't want to say 50%, close, like the 40s that we saw. They're profitable. I mean, gross margins. Oh, they have it listed down here now. Thank you. I mean, their gross margins were up. That's fantastic. All right, going back to our calculation, we're going to take this and we're going to divide it by 221,100,000. 220 million, 1,000. So this is a $66 stock trading at 48. So that put the stock right about here, right here. Um, yeah, I don't like that they have more liabilities than assets. Um, yeah, Finviz has a 2 recommendation, which I think that should be not as high of a recommendation, but whatever. 1's be really good, 5 is not good. Okay, what are institutions and hedge funds doing? Good questions, BBIW. So institutions own 97%, and that is old data because Finviz does not update their data regularly. I messed up here. BBWI. Like I was saying, institution or Finviz has 97%. It's old data because it does not update when new forms are filed with the SEC. This website that we are waiting on patiently is updated almost daily. And okay, it's still loading. We're going to give her a minute. Him or her, whatever. New data is 105. So that's a change of about 7%. Ownership is pretty high. I wonder what the shorts, only a 2% short. Interesting. Vanguard has added, BlackRock has decreased. T. Rowe Investments added 11 million shares, and Lone Pine Capital added 1 million shares. So do with that what you will. I'm not a fan of the liabilities overtaking the assets. They're operating. I just don't know what they could do to get that down, really. Unless part of their liabilities are their assets as well, but I don't. Okay, we have net property, plant, and equipment. It's going down, but not really. It's part of assets though. Yeah. Their total assets almost essentially covers their debt. So, I mean, I don't see a risk of bankruptcy because I mean they have enough cash, proprietary information, products to satisfy any loans, debts, liabilities, obligations. I just don't like that liabilities outweigh assets here. If we're looking for price targets, again, I would say price target to the upside is 666. That's pretty close to where that gap was that I called out. And then to the downside, we do have 46 and then about 40. So if you made it this far, consider subscribing. Thank you so much for watching. If you're in this one, good luck. Have a great week.